Dirty dealings, corporate battles, consumer woes. This is Evening 5. The Inland Revenue Board is closely monitoring individuals who own offshore bank accounts and will take action against any tax evasion, says its CEO, Dato' Abu Tariq Jamaluddin. During a media engagement session held today, Abu Tariq, who was appointed in December last year, said that IRB periodically received information on individuals keeping money abroad from tax authorities worldwide. The agency will examine this information to ensure that tax has been paid on savings abroad, especially if it originates or results from activities in the country. Abu Tariq said, as mentioned in Budget 2024 by PM Datuk Sri Anwar Ibrahim, that the IRB's tax collection target for 2024 is set at 197 billion ringgit. To achieve this objective, the IRB has formulated strategies with primary focus on taxpayer categories and behaviour. Meanwhile, the IRB recorded a tax collection of 183.3 billion, marking an increase of 7.8 billion from the previous year, translating into a growth of 4.49%. Abu Tariq says that this collection figure represents the highest in the history of direct tax collection in the country. He also expressed gratitude to all taxpayers for their contributions to national revenue, emphasizing that every ringgit contributed by the people to the country is crucial for ensuring the development and stability of the nation. Regarding the ongoing Special Voluntary Disclosure Program 2.0, Abu Tariq mentioned that the IRB has received 64,748 voluntary declaration cases as of January 31st, 2024, amounting to 573.5 million from both new and existing taxpayers. Abu Tariq urged taxpayers to participate in the program, assuring that all disclosures received under the program will be exempt from penalties. He also assured that no audits or investigations will be conducted on participating taxpayers in their future years of assessment. APB Resources has completed its 140 million purchase of a 10.37% stake in Globetronics, a semiconductor company based in Penang. This transaction marks the Ng family's exit from Globetronics, co-founded by its patriarch Michael Ng Queng Chong in 1991. APB, which makes design process equipment, acquired 46.31 million shares from General Produce Agency and another 23.68 million shares from Ng Queng Chong Holdings, following an agreement that had been signed on December 18th last year. Both are investment vehicles owned by the Ng family. Bloomberg data showed that the shares were traded at 2 ringgit apiece, totaling 140 million. The 2 ringgit price tag represents a 16.3% premium to December 18th close of 1 ringgit 72 and a 36.1% premium to February 14th close of 1 ringgit 47. APB had previously described the move to invest in Globetronics as strategic and timely to bank on the growth of the electrical and electronics market in Malaysia. The Employees Provident Fund remains Globetronics' biggest shareholder with a 13.44% stake, while Lembaga Tabung Haji has a 5.36% stake in the semicon maker. On February 7th, Ng ceased to be a substantial shareholder of the company after disposing of 6.08 million shares. The day after, Globetronics named 3 new members to its board, namely Executive Directors Liao Wei Gian, Kang Wei Luen and Koo Chong Hong. All 3 currently hold directorships in APB, Artronic and Sarawak Consolidated Industries. It is worth pointing out that counters of these companies faced heavy selling pressure in January during the small cap bloodbath. Tin producer Malaysia Smelting Corp saw its fourth quarter net profit plunge year-on-year by nearly 64% to 9.37 million, dragged by foreign exchange losses and the absence of sale of refined tin from processed tin intermediaries and byproducts. Revenue, however, improved 3.5% to 404.6 million from 391.2 million previously on higher tin prices. For the full year, MSC's net profit declined 13.5% to 85.05 million as revenue dropped by 4.5% year-on-year to 1.44 billion from 1.5 billion in FY 2022. MSC also proposed the final single-tier dividend of 7 cents per share for the quarter, bringing the full-year payout to 14 cents per share, double what was paid out in the previous year. MSC also announced that it has adopted a dividend policy payout of at least 30% of net profit. CEO Datuk Dr. Patrick Yong said that this new policy reflects MSC's commitment to long-term value creation while while allowing it to reinvest into the group. Going forward, Yong says the company is exploring new tin resources and expanding its mining activities to increase daily production and overall mining productivity while continuing to streamline its operations. At its smelting business, the company noted that the move to the Pulau Indah smelter is expected to result in savings of about 30%, together with the benefit of a smaller carbon footprint. MSC is also decommissioning its Butterworth smelter in stages starting in 2024, according to Yong. The world's largest glove maker, Top Glove Corp, anticipated that its sales volume would be minimally affected by the recent Red Sea shipping crisis, said AM Investment Bank in a note. Earlier this month, Pierre Hartelegger Holdings recorded a 10% drop in revenue for its third quarter due to lower sales volume as it faced logistical challenges from the Red Sea crisis, exacerbated by the decrease seen in average selling prices of gloves. However, Top Glove's management guided that its quarter-on-quarter sales volume will grow between 15% and 20% in its second quarter forecast, according to AM Invest. It is also worth noting that Top Glove saw a sustained medical rubber glove demand recovery since December 2023, with nitrile medical gloves improving significantly more than latex medical rubber gloves. AM Invest said this may be due to rubber glove users switching from powder-free latex gloves to cheaper options of nitrile gloves and the absence of latex allergy issues, coupled with a majority of Chinese competitors running at full capacity. In terms of pricing, Top Glove has been increasing its ASPs for nitrile gloves since October last year to pass on the higher raw material prices. Despite input material price reductions since the end of last year, ASPs for nitrile gloves remain unchanged to facilitate margin expansion for the group. It should be pointed out that Top Glove has the highest cost structure among the big four glove makers. AM Invest maintained its whole call on Top Glove with an unchanged fair value of 86 cents. Hume Cement Industries announced that its wholly owned subsidiary, Hume Concrete, has entered into a conditional sale and purchase agreement to sell a plot of land in the Prai industrial estate in Penang to Skygate Technology KL for 39.8 million cash. According to its boss filing, the property is not needed for operations and the proposed disposal will enable it to realize its investment in the property. The disposal of the leasehold land will come together with the buildings, thereon including all the fixtures, fittings and other things, measuring approximately 60,702 square meters. Hume add that the purchase price was arrived at a willing buyer, willing seller basis after arm's length negotiations, taking into consideration the valuation of the land at 28 million. The proposed disposal is expected to be completed in the second half, resulting in a net gain of about 32 million ringgit. Hume is 69.52% owned by Hong Leong Manufacturing Group.